Welcome, everyone, to our third installment of the Quant Financial Engineering Conference at Lehigh, although now we are on Zoom as last year. And in fact, in many ways, I think it works a lot better to get panelists from all over the world. In fact, we're going to start right now with Rekhit Pachanekar. He's actually reaching out from India, and he's a quant researcher. So, Rekhit, why don't you take it from there and start your presentation?
Thanks, Patrick. I'll just share the screen now. So I hope you guys can see.
Yeah, we could see it.
Okay. So yeah, hello folks, and welcome to the topic of algorithmic trading, or as people call it, algo trading, or just algo for short. So before I begin the presentation, I will just speak about myself for like a brief while. So my name is Rekhit Pachanekar, and I work as a quant researcher at Quantra in QuantInsti. So QuantInsti is a company which aims to educate the masses on the topic of algorithmic trading. So we mainly have two products. One is EPAT, which is a 6-month-long course, which gives you the A to Z of algorithmic trading. Whereas we have another product called Quantra, where we have bite-sized courses in machine learning or even like normal trading strategies such as mean reversion or StatR for that matter. So yeah, that's about me. And yeah, let us start the session by seeing what is in store for us today. So first, we would see what exactly is algo trading. So I always believe in the what, why, and how. So yeah, the first is what is algo trading? The second is why you should be doing algo trading. But I don't think that would be applicable because everyone knows about algo trading and how it is beneficial, but still I'll go through it. And the third part is the steps in algo trading. And finally, we'll have some facts about algo trading. So I don't want this to be a textbook sort of a presentation. So yeah, if there are any questions, you can ask me in between.
You will be
And
interrupted,
I have a,
Patrick, don't worry.
yes.
We'll stop you along the way.
Thanks, Patrick. Yeah. And yeah, like I said, it shouldn't be a dry presentation. So I'll have a real life example, like a trading strategy and how it works and how you go about it in general. So yeah, that is what is in store. Now let's go to the first one. So I always believe in first principles. So let us break down the term algo trading. The first thing is, what is an algorithm? So as you know, you can simply say that an algorithm is a set of instructions for solving a problem or accomplishing a task. So it could be a simple thing such as like going somewhere to buy groceries. You can even do an algorithm for that. All right, you leave your home, you go to the supermarket, you grab whatever stuff you want, come back. These are a set of instructions. But when it comes to the trading domain, like what can be the task? In simple terms, again, like find a strategy that generates positive returns. So that can be a task. So summing up, then what is algorithmic trading? So it is simply a process of converting a trading logic or strategy into an algorithm or computer code. Now, why should you do algo trading? The first thing is you might be a wizard at looking at the right opportunities. You can just look at the numbers and say, okay, like this is a good asset I want to trade in, and this will give me positive returns. But then you are a human. You can only track a certain number of assets in a certain geography. But with algo trading, like the world is your oyster. Like you can have different geographies like US, Europe, South Asia, Asia for that matter. And you can keep a track of a large number of assets, and if any assets meet your criteria, you can trade in them. Now, like, the world has become democratized and you can trade in various geographies now. So it is a great place to be, actually. So yeah, that is the first part. Second is, it also does not place emotions first. Now, you will have countless examples of people like sticking to a particular strategy, and then they will think that, okay, like, let me just stretch it for a minute. I know I have got the required profit level, but maybe I want more. This asset is trending, I'll go for it. And then sometimes the asset crashes, it declines, and you are there looking at the loss and thinking, okay, like, why didn't I stick to my trading rule? So with algo trading, it will stick to the trading rule no matter what. It does what it is told. And finally, like, algo trading does not rest due to fatigue. Now, you as a human, you might go 1 day or 2 days, like, tracking different tickers, looking out for different opportunities. But at one point, you'll be like, okay, I need to rest. With algo trading, that does not happen. So yeah, that is about why you should do algo trading. And it is not just something which we tell people. There are a lot of people who do various algo trading courses, and there are discretionary traders who come and do an algo trading course and then become algo traders or quants themselves. So that is it. And these are just a few like success stories of our company, but that is not what I'm going to concentrate on. Why you should do algo trading. One example is Renaissance Tech, which runs the Medallion Fund. All of you have heard about it. It uses quant models and algo trading for that matter. Tower Research is another firm. And just a quick fact, like more than 60%, like that number is way large, but I would keep it at a conservative estimate over here. Like I know for a fact that more than 60% are driven by algo trading. So yeah, that is why you should do it. Now, let's move on to, okay, what is exactly algo trading? Now, there are various stages, there are various algo trading models which teach you like, okay, this is the order manager, this is the complex event processing engine. But I thought we will keep it simple over here. Just 4 steps, simple enough. And yeah, so broadly speaking, at step 0, you would be like, okay, I am interested. I want to do algo trading. Then you move on to step 1, that is ideate and create trading rules. Now, it might look a bit weird, like create trading rules, but it is simple what you do normally. It can be as simple as, okay, if an asset goes 1% in one day, I will buy it. And if it declines by, let's say, 0.5% in 2 hours, I will sell it. That could be a simple trading rule. But that is okay. Like you have created a trading rule. Great, awesome, good luck to you. But here's the kicker. The second part is where you actually test it. Now, you know that you have exams, right? Where you learn something and then there are exams to like evaluate your performance. In the same way, you backtest a strategy and you evaluate its performance. So once that is done and you are confident, okay, I am good, like this strategy is giving me 400% returns. I want to do this. I want to trade further. So here's where I tell you that don't jump in directly. Don't live trade. Take a moment, do something called as paper trading or demo trading, however you want to call it. Take real-time market data or a bit delayed market data, practice on it, practice your strategy on it, see how it performs. And once you are confident, okay, this is still working in the real market, I want to do this, then you go ahead and you start your trading. So yeah, these are simple, like 4 steps, very easy to understand. And let me take a moment. Is there anything which, Patrick, you want to add something?
Yeah, well, I have a question. And basically, is there a is it algo trading versus paper trade, or and what's the is there a
No,
negative side to algo trading? Why aren't we all doing it? I mean, you said 60%.
yeah.
What's
So one thing is, when it comes, okay, the figure 60%, it is more than that. That number comprises of both like hedge funds, institutions, and retail traders. Now, most of the institutional traders or like hedge funds have moved on to algo trading, right? There are still a few, like, I don't want someone telling me, okay, no, not everyone. I know for a fact that this company doesn't do it, but there are a few, but then a majority do algo trade. Uh, Another question which you asked, which was interesting. So paper trading is an old concept in that sense. Uh, Once you have algo trade, once you have backtested a certain trading rule, then you move on to paper trading. So you can say that that can be a part of your algo trading journey for that matter. So it is not something which is opposite or which competes with algo trading for that matter. Yeah. I think you're on mute, Patrick.
Yes, I am. So what is the level of math I should have before I start to do algo trading? I guess they want to know what kind of a background you need.
So if you are looking for, let's say, if you want to get placed at a quant trading firm, then the level of math would be like at least college level or like a PhD level. But then that is something which is where you are working for the big firms. Now, I don't want to discourage people and say, okay, you cannot do this. We have quite a few like students who come in from a different background. Like there are people who come in from the arts and they say, okay, I want to try my hand in the financial markets. So we say that is not a problem. Uh, you can actually go ahead and learn while you're doing this. So there are broadly 3 skills which you can say. The first skill is knowledge about the financial markets, which is something which you have to know. Like you need to know how the market runs to actually like become good at trading, right? The second one is where your question comes in, the level of math. It isn't exactly rocket science in that matter. There are a few strategies which do not need complex math, like let's say derivatives or like equations for that matter to like create the trading strategy. Like I said, there are technical indicators, right, such as RSI, MACD, even ADX, which are simple enough to understand and code. Now, when it comes to coding, I would say a lot of people code in Python, which is as close to a normal English language as you can get in terms of programming. So yeah, it is simple. And the great thing about Python, okay, I don't want to be like
Regan,
what do you,
let's not draw out too much the answers because I have a few more questions. So
okay.
try to make it like a 1-minute answer, otherwise it's going to be tough for
All
you.
right.
I have
Okay.
another question. Obviously, it's a very interesting topic. We
Okay.
use many strategy while trading derivative, but if anything goes wrong, you make adjustment trades to convert losses in profit. Is that possible in algo trading? So we use many
Once you're
strategies, yes.
uh, once you're in the live markets, the first thing which you can do is stop your system. Like it is like turning off a computer, right? You can turn off your trading strategy in that sense. The second thing is to get it back to a profitable trading strategy would be, I don't want to like tell you that, okay, it is really simple. At the click of a button, it will turn profitable. That won't happen. So there are times when, let's say there's a market change. It went from a bull to like bear, just like we saw in 2020. It will be difficult, right? So at that moment, you would be more focused on, okay, like just pausing the strategy and making sure that you're not exactly uh, creating more loss for yourself. So you stop there, you'd go back to the drawing board, see what is happening, see if the strategy works in a scenario like this. You can always back test it, change a few parameters, but it might take time to get your strategy up and running into a profitable one. Yeah.
I have another question here. We use, what are some example of trading rules?
Interesting one. Can I get back to this with just
sure. Okay. All right,
in
that's
just
fine.
a few minutes?
Okay,
Yeah.
let's keep moving then.
But to give you like a simple example of trading rules is, you can take any technical indicator and create rules on that. So for example, take the RSI indicator. If it is above, so the RSI indicator gives you a value between 0 and 100. If it is above 70, it considers the asset to be oversold, overbought, sorry for that matter. Like, and it means that it is heating up. So you would consider selling it. And when it goes below 30, you would say that that asset is being oversold. So you would consider buying it. So that is one strategy. That is a trading rule. You know where to enter and when to exit. In a long only strategy, you would buy when the RSI is below 40, and you would sell when it is above 70. So that is a trading rule. Does it work or not? That is where your backtesting comes into play. Yeah.
Excellent. Okay, you can keep on going. You have about 10 minutes, 12 minutes left.
Okay.
So
I will
make it as
try
efficient
to,
as you can.
yeah, I'll try to breeze through it. Yeah.
Yes.
So, all right. So before you start algo trading, these are a few things which you should know. Like, you should know which asset class, which geography, which asset do you want, and the data source. Now, data source, I've kept it over here because a reliable data source goes a long way in backtesting and evaluating the performance of your strategy. Now, if your data source is not good and it contains a lot of incorrect values, then your strategy will give you a very biased performance report. So yeah, apart from that, you need to know the entry and exit rules, stop loss, and the take profit levels. Now, what I've done is I have taken an example. So let's say we want the equities. The geography is US markets, and we have Apple as an asset. It's one of my favorite companies, not the mobile phone, but the company. So that is it. And for the entry and exit rules, we would take the MACD indicator. And so you need to know the stop loss and take profit levels. You cannot just say that I will take the maximum profit I can. That won't work. You need to set a level, and you need to go that, okay, once it reaches 4% from your entry price, you would sell that asset and book the profit. In similar way, if it goes below 2%, you would sell that asset and book that loss. So yeah, these are a few rules. Now, this is a flow chart. Now, I don't want to go into the indicator, like what is the MACD indicator, but I'll just go through the flow chart of this strategy. Initially, it would be like, is there an open position? Now, obviously, when you're starting, there won't be an open position. So you go on the left side, you calculate the MACD line and the signal line. In case you do not know, it is just a variation of different moving averages. The full form of MACD is moving average, convergence, divergence. And the signal line is a 9-period moving average of the MACD line. So the rule is that when the MACD line crosses the signal line from below, which means that it is going from below above the signal line, it means that the asset is trending upwards or it is going higher. So you buy that asset. If it is not going, then there is a no and you don't do anything. Now this is a long only strategy, so that is where there is a do nothing. Otherwise, there might have been a short or something like that. So this is for buying the asset. Now, what about exiting? So once there's an open position, you would ask your computer program to check the prices every day, for example, 15 minutes before the market close. And if there's an open position, it will check whether the entry price which you started in. Now, let's say you had bought Apple at $146, and let's keep it at $100 for like easy maths. And then you check whether it is less than the stop loss. Now, uh, I would say that since it is 2%, did the price go to till $98? Or if it is $96, which means it is less than the stop loss, so you would exit the position. Or if it is 4%, if it went $105, which is above our 4% profit target, you would exit it and book the profit. Otherwise, you do nothing. So this is a flow chart, and I think I have time for this.
Well, hold
So
on. You think you have, but I have a question. Please
all right.
share some light on application of machine learning methods in algorithmic trading, especially reinforcement learning.
Oh, that is an interesting question.
Yes, indeed.
And the thing is, we recently created a course on reinforcement learning. So, all right, 1 minute answer. I'll try my best.
Yes.
So, reinforcement learning is something which learns as it is performing. So, unlike other machine learning strategies, which might have a different train and test, what reinforcement learning does is it goes through the whole data set. It checks where there is a concept called as delayed rewards. So to take the example of chess for that matter, recently Google's DeepMind created one on chess. And while normally when you're playing chess, the ultimate objective is obviously to get the other person's king or queen, if you are in that region, the main player. But you still try to keep your other players also on the table. But with deep reinforcement, you go all out. You would say that I would sacrifice all my players to get the ultimate one, to get the queen of the other player. So that is a delayed reward. So you don't mind losing a few things till you get the main thing. So reinforcement applies the same concept to trading. Even though there might be a loss in the short term, if it knows that you are getting a decent profit afterwards, it will keep that position and it will exit when it knows that, okay, this is the optimum reward I can get. Reinforcement learning is a bit complicated. It will take more than 1 minute to explain the whole thing,
Sure.
but yeah, that is the concept.
Great. Go ahead.
All right. So what I'll do is I'll just quickly show you something which we have been developing actually. Give me 1 second. So this was the strategy which I was talking about, MACD. So this is the Blue Shift platform where you can research, backtest, and you also have a live trade feature as well, right? So there's a go live function. So what I've done is I've already coded it. There's a visual programming interface also if you're new to programming. So the main thing is you have the asset Apple, you have the stop loss take profit levels, you have defined the signal, you know what you want, the MACD signal line, and you have the long entry and the short entry where you want it. So what I'm doing is the data set is US equities. Now, obviously, this is a very short time period, but since it takes a while to backtest the year-long data, since it is in minute level, so I'll just do it for like less than 2 months. So I'll just hit run. But essentially, this is what you might be looking at when you're trying to backtest a strategy. The rules are the same. You're using the MACD indicator, which we talked about. So give a minute. So yeah. So it ran. Now I will go through this bit. Returns is something which you are familiar with, like 15% returns. This is the portfolio which is in blue. The benchmark is in orange. And yeah, in 1.5 months, it obviously beat the benchmark. That is awesome for us. The alpha is 2.52, the beta is minus 0.36, the Sharpe is way too high because since it's a short time period, that is why. And the drawdown is low as well. Now the drawdown means that the maximum percent your returns have fallen. So if I had started with 10K, at one point it had gone down 1.2%, which is the maximum it has gone. But afterwards it went up. So yeah, this is what backtesting looks like. And to fast forward a few things, let's say that you are confident, you tried it out on 20 years data and you got decent returns. You are confident that you want to live trade. So you just hit go live. You simply select execute. And now these are a few things which you need to know. Now, if you go to settings, your drawdown limit is there, order limit and everything. So that is fine. You continue. Now here's where the selecting broker comes in. For Blue Shift, there are different brokers like Alpaca, FXCM, and Master Trust. I've selected Alpaca for paper trading because, as I said, we want to do paper trading first, right? So that is there. You select the broker, but obviously, depending on your broker, it would be different. You can have Robinhood for that matter, or any broker which supports algo trading for that matter. You click continue. There's an auto execution mode and one click, which means that the algorithm will auto execute if it finds the right condition. So you click continue, you read, these are generic, and then you finally click on review, done, and then confirm. So then this will start your strategy in the live markets. And then you can see, like you can you can paper trade for a few days, few months, however you want it. And then you can take a call whether you want to go live or not. So I've done this like a few months ago. This is an earlier strategy which I had done. And these are a few trades which it did in 2 days. So this is how the performance and the parameters are and they look like. So yeah, I think my time is up now. So should I stop or should I keep
Yes,
going?
no, that's it. I have our next panelist. I guess we need more time, but we spent all day.
Right.
But anyway, so if anyone is interested to reach out to you, they could always send me an email, which is in the chat, and I will definitely put them in touch. You in touch with them. Thanks, Rekhit.
That's great, Pat.
Thank you very much.
I will just stop my sharing.
Yes.
Yeah.
So next is my good colleague Sri Krishnamathi. He's a CEO at Quant University. Oh, here he is. He's in his office with all his books.
Everything's fake now, correct?
Yeah.